Hi there. Today, I want to talk about why I think everyone should start investing right now. I believe that investing is very important for your financial health and to take stress away off of the finance aspect of your life. I want to start off with a quote by Warren Buffett. He's a famous investor. He's a very wealthy man. I think he's one of the top, 5 in the world. But he says, if you don't find a way to make money while you sleep, you will work until you die. This is referring to, of course, your passive income streams, finding ways to make money that you don't have to work for. The stock market is a great example of this. Also, real estate, and so on and so on. The sooner the better. Right. So the more time you give your money to grow in any investment is going to be better for you in the long run. Right. As you can see on this graph, time is crucial to increase the value of your money. Right. This is because of compound interest. Compound interest is taking those gains that you get from your investments and reinvesting those gains so you keep growing. And it actually grows at an exponential rate. Time also allows you to take risks with your money. So if you're, younger when you start investing, you give yourself that time to take those kind of riskier investments and benefit from these higher returns that often accompany the riskier investments. Right, and then this final reason, you'll be able to retire sooner rather than later if you start investing as soon as possible. Going back to this time aspect of your investments, you want it to have as much time as possible to accumulate that value. And then another quote by Warren Buffett, because I really like Warren Buffett. He says, "Someone is sitting in the shade today because someone planted a tree a long time ago," right? So going back to that principle of taking care of your future self right now. Okay? Another reason you want to start investing as soon as possible is to outrun inflation, right? We know that if you just have cash sitting around, it loses its value every day, and that's due to inflation. And inflation is just the purchasing power, basically, of your money. And that purchasing power goes down actually as time goes on. So you want to get your money into an investment vehicle that will give you a higher rate of return than inflation is going up. So I put on here the S&P 500. It's a pretty common stock index. It's kind of tracking the 500 top companies in the world. And I put on this average annual return between 1937 and 2016 is about 10%, and then inflation in the U.S. usually sits around 1 to 4%. I think last year it was something like 2%. So yeah, you want to ensure that your money will grow faster than inflation, so that you don't lose that purchasing power, and you actually accumulate wealth as opposed to losing wealth. All right, so stock market versus a savings account. A savings account is not a bad thing to have. I highly recommend having a savings account and consistently putting money into that. However, if you don't invest in the stock market or other investment vehicles, you're losing out on return. So with a savings account, one of the biggest cons is that there's very little protection against inflation, and with that, very low returns. So if you go into the stock market or other investments, typically they have a higher return they should have a higher return than inflation. Stock market, it's typical to see about 7% growth annually in your investments, but there is with the stock market a higher risk involved with that, and I'll kind of go into that a little later on. All right, so right now investing in the stock market is super easy. You don't need to be an investment professional. You don't need to be certified in the security industry to be able to invest. You know, there's a common misconception out there that if that random person, if they invest in the stock market, they'll end up losing money, and that's simply not true. Anyone can invest. It's never been easier. There's a bunch of apps and resources out there to help people invest, and especially those coming fresh into the stock market or you know, real estate or anything like that. I've put some resources up here. I want to highlight Robinhood for a little bit, because this is an app you can download on your phone and you can start investing in, you know, a couple days. It's super easy, super user friendly, and it's free, which is the best part. Okay. It's not as risky as you think to put your money in the stock market. Everyone kind of has that misconception that if you put your money in the stock market, it's super risky. You're not going to get your money back, sort of thing. You have to be lucky, and that's simply not true. It is riskier than some investment vehicles out there, like a savings account, but the reward in the long run is much better than a typical savings account or anything like that. And I put on here some ways to avoid that risk of investing in the stock market. You want to choose index funds or mutual funds or ETFs. And what these are a group of individual stocks, and they're all brought together. So you're paying for that collective fund. So it's kind of diversifying without doing a lot of work, right? You also want to diversify in what kinds of stocks you buy, large cap or medium cap, small cap. Large cap are going to be less risky, also yield higher return or lower return, and then the risk goes up as you move down that spectrum. You also want to have you know, a balanced portfolio of stocks and bonds, and you know, different kinds of stocks out there that you can buy that kind of decrease that risk of investing in the stock market. All right, so how do you start? So I put on here 6 steps that you can take today or this week, you know, whenever that you feel good about it, and you can apply them to your life to start investing. So number 1, decide on an investing strategy. For this, you can talk to an investment advisor. However, there's a lot of resources on the web for this. Number 2, determine how much you want to invest, and this kind of goes along with how much are you comfortable not having in your bank account right now, sort of thing. Number 3, open up an investment account. Again, Robinhood is a great resource for this, but there's tons of ways you can open an investment account. There's tons of companies that deal with this and will help you do this. Number 4, choose your investments. Like I said previously, I would stick to index funds and ETFs and mutual funds if you're a brand new investor. And as you continue investing and learning, you can better know what you want in your portfolio. Number 5, we talked about this in the last slide, but diversify your portfolio. Make sure you don't have all your eggs in one basket. And then finally, you want to continue investing, continue learning and investing in yourself, right? And then finally, I just want to take a look at this image right here. So this is representing the volatility in the stock market, right? So, you know, a 5-day snapshot of the stock market is going to look like this. There's going to be a lot of up and downs, and maybe you lose, you know, a good percentage of your portfolio on any given day. However, it typically rises in the long term. So it says down here, you decide which one you want to focus on. But yeah, thank you. That is my presentation.